Hey, ladies and gentlemen, welcome to another episode of the Beyond Seven Figures podcast. My guest today is a co-founder and CEO of a rapidly growing open source project that's used by over 10,000 teams. He employs people in over 16 countries. He's raised over $51 million in capital. He's also been the co-founder of 3 other startups, one of which was funded by Sequoia Capital. So as you can tell, he's not new to the game of entrepreneurship, and he's got multiple different successes under his belt. So I want to welcome Abhishek Nayak to the show. Did I say your name right? I know I practiced a few times before we hit recording. So Abhishek Nayak, did I say that right?
You got that absolutely right. So thanks for practicing and getting that right.
No worries. So, I was looking at your bio on LinkedIn, and I noticed back in July in 2016, you started a company known as Bicycle AI. So you actually were into artificial intelligence long before it became super popular like it is today. Is that right?
Yeah, that's right. And to be honest, I'm surprised that it's become popular again because, AI has gone through its cycles, peaks and troughs. When we were working on AI, there was a little bit of interest, but there wasn't that much interest in the market. That was a fun company to work on, but the technology was incredibly hard to get that right. Versus today, the AI revolution, it's been driven by sort of like a single company or maybe like 2 or 3 companies. It's not multiple companies who are building the foundational technology. It really is like 2 or 3 companies who are building the foundational technology, and the companies that are now being created are riding on top of this new technology. So it's quite an exciting and different way of doing things. Back in 2016, all the companies who were working on AI, they were all building their own technology, and very, very few companies actually ended up surviving that phase.
But today, and with the different
Yeah.
advancements of AI and the learning of the AI itself and whatnot, I think we've reached a new level of disruption today. Would you agree with that?
I completely agree. I think today people can see real use cases. People can see the fact that, hey, if I use this, it's going to save me like 30 minutes of my time every day. And managers are seeing that, founders are, of course, seeing that. And that's why they are all jumping on the train to use AI. Even at Appsmith, we are also looking at how do we actually use the new AI APIs inside our product and just make something a lot more simpler. So what I really like about this AI revolution is, one, it's being driven by actual use cases,
Yep.
and it's not just hype around AI in general. That is really good. Back in 2015, 2016, there was a little bit of hype, but there was hype around the technology and not around problems and not around real use cases. So this is quite different.
So let's look at the use cases for a minute, and particularly maybe how you're using AI within Appsmith, and not just the product itself, but even how you see AI playing a role in almost every different job inside of Appsmith itself. How do you see AI playing a part in your company?
For people who don't know, Appsmith is a product that's used by developers who use Appsmith to build all sorts of custom internal applications. These could be applications for customer support, for operations, businesses, for business operations, customer onboarding, various little use cases. We like to say that Appsmith helps you fill gaps because you can really build any small application that helps you do something that was either on a spreadsheet or you didn't have a process at all. Now, our users are all developers, and the average developer wants to write as little code as possible and wants to be able to build everything they want very fast and accurately. So AI can actually help them build things faster inside Appsmith. It can do a lot of the coding work for them, things that are boilerplate, things that are simplistic. It can take care of it. But the second thing that it can do is it can also explain poorly written code back to them and give them ideas on how to debug it and how to improve the code that they've written so that it does what they want it to do. So AI is really good at those 2 things from the perspective of Appsmith, and that's where we are looking into it.
And what about other roles within your company, the employees within your organization? How do you see AI playing a part at all the different levels, whether it's marketing or sales or HR? How does AI play a part in those roles?
So we've started using a little bit of AI in creating technical documentation, which is, explaining how a particular feature works. When it comes to writing marketing content, we found AI generated content to be a little bit verbose and a little bit not punchy. It sounds a little bit boring. So we did look into it, but it's unclear if we can directly use it. But for technical content, I'm actually very excited about it, and we are already using it a little bit. That would be really cool.
And I think where AI is often mistaken is people look at it as a tool that replaces people, but in most cases, I see it as a tool to enhance productivity because, as you alluded to earlier, it's the inputs that's a reflection of the output. And a lot of people still don't see that. I think we're going to see a lot of still higher productivity of mediocre output because too many people are rushing to just put junk in the front end, and then they're just going to get medium stuff in the back end instead of spending more time fine tuning the inputs on the front end and then getting a much higher quality output in the back end.
Yeah, you're absolutely right. I think the first point that you made, which is AI is not replacing people but augmenting you, that's absolutely true. And I can see even in my team, there were a few, especially in the technical writing team, they were wondering, hey, is this actually going to take away our jobs? Is it possible that it's going to take away my job? But then I just showed them how sometimes AI gets it wrong, and it's not trustworthy 100% of the time. It's probably trustworthy maybe like 60 to 80% of the time from our experiments. And look at the fact that now you as a writer can just produce so much more content. And you're sort of like an editor who's working with an army of people. I really have to try that David Ogilvy prompt because that sounds really cool. And I'm going to see how that works. One of the things that has been helping me personally is not my native language. It's my sort of like my second or my third language. So my English grammar is a bit poor, especially when I write. So I love using Grammarly for that, and I definitely look forward to using ChatGPT to just eliminate these grammatical errors and just help me write more accurately faster. So from that perspective, I think for all Europeans, Asians for whom English is a second language, I think they should be super excited about using AI to just write better and write more accurately.
I had to go into those questions with you because, again, you were way ahead of the curve when it came to AI over in 2016. And now it seems like everybody's talking about AI. And if you're not talking about AI, you better start talking about AI because, as I've told my team, this is a rocket ship that's about to take off. And if you're not standing on top of the rocket ship and going up with it, you're going to be left behind in a major. So you raised over $51 million and you've ran multiple other companies, all raising money. A lot of CEOs that we work with oftentimes have a question that they're asking themselves, which is, should I raise money or should I grab a loan from the bank and fund my operations that way? Or should I just continue to self-fund my business and go that route? So can you talk to me a little bit about the pros and cons behind either self-funding, doing a bank loan, or raising money as you have?
Yeah. So in my first startup, for a period, we were completely self-funded and we were actually profitable. And then we raised money to focus on growth. So I would say for a period of about less than a year was when I was actually running a business completely using capital that we had put in and using capital that the business was throwing off. So the main thing that I learned there in that first business was if you're in a competitive space, which is going to get funded by venture money, it's really hard to turn a profit as a self-funded business. So if you're running a self-funded business, then you better be in a space which is being ignored by venture investors, because venture funded startups, they tend to eliminate all possible profits out of your industry, and they want to eliminate profits for a period so that competition gets eliminated, and after that then they can go on and raise prices and try to own that market. So that's something that I saw. One of the biggest reasons why we ended up raising money with that business was because we started seeing competitors who had raised money and there was no way we could compete with them on price nor on talent. And that's when I realized I also have to go play that same game and play that in a way that my competitors are playing. Because if you don't have capital to compete against them, you really struggle. So that's something to really think about. Are you in a space which doesn't have venture funded startups? Then you're actually in a good space and you could easily self fund your business and grow using your customers' payments and your customers' revenue, which, to be honest, is really the right way to run a business that forces you to focus on unit economics on day one, focus on efficiency on day one, and get all of that right, because that's a really essential part of a business. Versus when you raise venture funding, you push away the conversations and push away the hard work around efficiency for a little bit in the future. You cannot push it away forever. That's something that you have to remember, but you do push it away for a shorter period of time so that you can focus on growth and focus on ensuring that you are one of the dominant players in that industry. So that's a different way of running a business. And personally, I find the fact that when I raise venture money, I'm able to dream bigger, and I'm also able to work with a much higher quality of team members. Team members who are incentivized by equity and therefore are working just as hard as I am, if not more in some cases even. So there are all these ambitious people that I'm able to hire and work with them. Because one of the things that I genuinely love about entrepreneurship is doing it with a team that's always challenging me and a team that's honestly better than me. So after that first experience, I realized I really love dreaming big and I love working on very challenging things with a team that's excited about it. But having said that, I'm definitely careful about ensuring we are efficient, ensuring we are not overhiring, and ensuring we are building things the right way. Like in case of Appsmith, we've raised all this capital, but we are growing the company using product-led growth, which is a very highly efficient way of acquiring customers. We don't have a sales team. We don't spend any money on marketing. We are very focused on ensuring our product is what convinces people to buy more features. And so we're very focused on ensuring our product is great, and that's what converts our customers. So our sales conversations with our customers are generally about pricing and not about convincing them about the value, because they've already seen value with the product and now they're simply buying more features.
Got it. I'd like to hear your experience. Over the past week, I spent some time with a number of different CEOs that have had some venture financing, and there was a stress that they had with their investors. Another gentleman called me up the other day. He's got a company that's got $1 billion valuation, and he said his stress level on a 1 to 10 was about a 20. And it wasn't the business that provided the stress, it was the investors that were constantly providing the source of stress. The investors are obviously looking for a return. There's a lot of demands on those investors, and they're constantly looking for information. So many CEOs go into this with this idea of, this is great, somebody's going to go in, give me all this money, and then I can do my own thing and spend this money as I want and still remain completely independent, so to speak, until they realize, well, wait a minute, I have to answer to somebody now. And these people are relentless, which they have a right to be because they put millions of dollars on the line. How do you respond to what I just shared with you?
So it's something that I didn't appreciate so well in my first startup. I used to think of investors as adversaries, as somebody whose interests are completely misaligned with mine. But I realized, and definitely I believe that today in the startup, is that their interests are different, but they're not necessarily misaligned. And the second I decide to raise venture money, I am committing to a path which is a treadmill of growth. And I am committing to running a business that over a period of a decade, and if it goes public, then over a period of multiple decades, has to deliver that growth for investors. And if that's something you're not aligned with that goal, you're definitely going to struggle as a founder CEO. I believe having a goal like this, which is growth focused, is not necessarily just the only goal, because I've seen the right investors at different stages worry about different things. Like at this stage of a company where Appsmith, I would still consider it a early stage company despite having raised so much. Our investors are quite focused on the foundations of product market fit, foundations of GTM. The next level for us is growing our GTM, growing our revenue. The level after that for us is ensuring that growth and that revenue is coming in at the right cost. And the next level after that is ensuring we are continuing to grow, but we are also ensuring that we are entering new markets and expanding our TAM. So they're just different levels of the game. And the most important thing is to ensure that you treat your investors as a part of your exec team, give them access to that information and give them access to all your thoughts, and ensure that they're aware of exactly where you're struggling, where you're not struggling, and treat them as a part of your team. Now, you are going to have difficult conversations, but that's where, as a CEO, you have to listen to them. You have to understand what is it that they are looking for and figure out a way if you need to change your direction or they need to change their direction. But
Yeah.
you cannot run a company where the board thinks completely differently from what your management team thinks and what your management team is focused on. And you as a CEO, you have to ensure that those interests they're getting aligned. And wherever there's misalignment, identify that misalignment and actually address that immediately and figure out if you can actually align them or not. And in some cases, it might make sense for the company to let go of you. And that's something you have to be open to that, because the second you have your first employee who has equity and the first investor who has equity, the company is no longer yours. The money is no longer yours. Now, does that remove the romantic idea of being an entrepreneur? Not for me, definitely not for me. I love the idea of working together with an exec team, with my investors, and with my team members to achieve something great. Because I know all of us are working towards achieving something great. And I cannot do this alone. And I don't think I take any pride in saying that, hey, I built this company, because I didn't. It's just so many people who are involved in this. And I just play a role in this team. And I play the role of the captain of this team. But I'm not the only person, and I'm not the only person who matters for sure. And honestly, when it comes to stress, I don't look at this kind of stress as something that's personal stress. I look at it like I'm playing the sport and I'm playing this game, and I have to understand that the game and the sport is bigger than I am, and the sport doesn't completely define who I am. So that's really important, because otherwise it gets to you. Otherwise, you're constantly thinking about failure and you simply cannot succeed if you're constantly thinking about failure. So you have to realize that the company is bigger than you, and your stresses are minor if you look at them in the bigger scheme of things. The bigger scheme of things for me is the fact that all of us are going to die, nobody's going to remember us, and it's all going to end. So let's just have fun with this.
It reminds me of a conversation that I once had with Tony Robbins. He said, understand one thing: big people have big problems, little people have little problems. The difference is little people run away from their problems, big people create big problems for themselves. And when you talked about, stress being a good thing, it's because you've obviously done this several times. You're obviously very successful, but you're creating big problems for yourself. So yeah, stress is one of those things. You either embrace discomfort and grow, or you don't. Let's dive into PLG just for 1 minute here. You talked with Appsmith that your primary growth strategy right now is tied to PLG. What is PLG? Let's dive in a little bit deeper into that role and why you chose to go through the product-led growth as opposed to a more traditional type of method.
So I'll answer the second one first. The main reason we decided to go with PLG is because engineers don't open their email inboxes, and they have ad blockers on, and they don't read emails. So we did try a bunch of cold outbound in the early days. The conversion was much poorer than what I had seen at my previous startups, just much poorer. And I quickly realized that this audience buys things differently. And I then, thanks to my co-founders who had been telling me that, hey, we can't sell this through emails, I went, spoke to them, I spoke to a bunch of other engineers and tried to identify how is it that they buy. And I realized for engineers, they have to test and prove value of something before they go pay money for that. So I realized what we call as PLG right now, but like 2-3 years ago, we were thinking of it as proven value. First we got to use Appsmith to prove value in an organization. And only after that, we go talk to them about finding more value by buying our paid features and by buying additional services. In some cases, could be like support or something like that. So that's how PLG works for Appsmith, which is an engineer comes in, they download our open source project, they start building things on top of it, and they then spread it inside their organization. After they've spread it to about, let's say, like 20, 25 people, they realize they need more features in Appsmith, which are features like SSO, role-based access control, audit logs, more security related features. And that's when they come talk to us, our support team or our product team, and then we have a discussion about the pricing.
Mhm.
Or they're okay with the pricing and they just go ahead and pay us. So I'm simplifying a lot of things, but this is sort of the way Appsmith's motion works. And I believe this is the right thing for our customers, because when we have a conversation with them about pricing, we've already proven some value. We've not completely proven complete value, but we've already proven some value. So the risk is lower. And the risk is now a shared risk that Appsmith is also taking with that engineering team or that engineer who's decided to adopt us. So there is that shared risk. And this sort of a sales motion has been very different versus what I've been used to in the past. In the past, it was more traditional, which was a mix of outbound plus ads to generate leads, or go talk at conferences to go meet people, or at trade shows to go meet people, and then convert them. While at Appsmith, ever since we launched the product, I've never sent a cold email. I stopped doing that once we launched our product and the product started succeeding. And we've never advertised, because we just have so many people who adopt the product grounds up and they use it and then they come talk to us. Now, over time, we will layer on outbound, because I've realized with this PLG motion, we are able to work with mid-sized companies, companies which have up to like 5,000 employees. But beyond that, we do have adopters, but they don't tend to introduce it to the larger team. So if you're in
Yeah.
a Fortune 100 company, you might use it in a small team, which has like 20, 30 people, but they're not introducing it to the rest of the org. And that's why we have to layer on sales. And we
Yeah.
have to layer on a more conventional buying experience for the buyer there. So I don't think it can be 100% PLG. Maybe if you're selling to just SMBs, that's possible. But in our case, PLG works really well for small to mid-sized companies. But for the enterprises, we will be layering on a traditional sales process.
PLG, as you mentioned, it's working really well for your business. And I think it by nature, if you just built any product and service, regardless of the business that you were in, and you said, if I could only grow this company by delivering results, what would my product or what my service have to look like? And that is a wonderful approach. But even if your primary strategy is, your primary strategy is PLG, and that's because you really understood your buyer, and that works out great. And for a lot of companies, PLG isn't going to be the leading strategy, but as you said, having multiple different spokes and eventually expanding into outbound and whatnot, it just builds more robustness into the overall.
And you're absolutely right that you have to sell the way your customers want to buy. And I know PLG is a hot topic, so everybody's trying to adopt PLG as a way. But for some companies, it's just not the right thing. Maybe you're selling software to lawyers. Lawyers are not online all day trying to figure out the next best product to buy. That product and the value better show up in their inbox, or better show up at a conference that they're attending, because otherwise they're not going to find you. So
Yeah.
just doing PLG for everything, I think that's a foolish idea, to be honest.
One of my favorite questions to ask. This is the Beyond Seven Figures podcast. And so, what would you say your number one best tip is for the CEOs that are listening, wanting to take their company beyond seven figures?
I think the number one tip that I have is more focus. It sounds silly and we hear it all the time, but I've just realized things that work, you just gotta keep doubling down on it till that stops working, instead of trying to do two or three different things at the same time because you're worried that one thing is not gonna work. Every single time, I've just been surprised how much I gain by focusing on something that's already working and just spending most of my efforts on that one. And my biggest advice to myself and my team has been, hey, remember that some of the stuff is already working and you gotta invest 80% of your time and energies there. The job is not just to go find something else that's gonna work, because then you're ignoring the things that are already working really, really well. So we sometimes underestimate how much further that thing that is making you successful can actually take you even further. Now, you might not do it the same way. Like for us, PLG last year is different from PLG this year, but we shouldn't lose sight of that, and we shouldn't lose sight of the things that are working.
That's a great, great, great point. Focus is really, really important. So, if people want to learn more about Appsmith and you and what you do, where do we direct them?
You can find out more about Appsmith at appsmith.com, and you can find me on Twitter. You can search for Abhishek Nayak and I'll show up on Twitter. I don't tweet that much, but I do tweet about open source, dev tools, PLG. That's sort of my niche that I talk about.
Got it. So then, just so that I'm clear, it's appsmith.com. Is that right?
Yes, it's appsmith.com.
So appsmith.com. And then also check him out on Twitter at Abhishek Nayak. And the proper spelling will be in the show notes. So, you'll be able to find him there. Well, Abhishek, this has been really, really wonderful. I've very much appreciated our conversation. So thank you for sharing all of your wisdom. We've covered so much, everything from our early discussions on AI to what it's been like to work with different investors and should you raise money and when to raise money and so forth. And we talked about stress and the benefits of stress, building a team that's smarter than you, PLG, and so forth. So again, great episode. Now, for
Thank you, Charles.
those of you who are also wondering about more tips and strategies for growing your business, I also want to encourage you to check us out over at predictableprofits.com. Again, that's predictableprofits.com. So that wraps up today's episode. This is Charles Gaudet with my new friend, Abhishek Nayak, and I will see you in another episode.